Hey everyone, Palo Alto reported earnings results that sent the stock price down. So there was a lot of information that came out investors were not happy with. So I thought I'd do a further analysis here, dig into the details, try and answer what's going on with Palo Alto Networks stock. So let's jump into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so revenue grew 19% year over year, and RPO, which stands for remaining performance obligations, grew 22%. Billings grew 16% year over year. And management notes that they're focusing on profitable growth, which is curious because in the short term, they're taking some steps that are competitively aggressive and could hurt their profit margin in the near term. So this was good news to see that their 10 highest spending customers in the second quarter increased their spend with us by 36% in the period. The 10 highest spending customers. That means they're getting great value from the service with Palo Alto Network and they're increasing their spending with them, right? Otherwise, they wouldn't increase their spending if they weren't getting a good return on investment. They wouldn't increase the spending, but they are. So that demonstrates that Palo Alto Networks is delivering good enough value to get customers to increase their spending year over year. So they continue to see strong trends in multi-module adoption with approximately 30% growth in customers with 2 or more modules and approximately 60% growth with customers with 3 or more modules. Now, that was the big story in 2023 was consolidation and Palo Alto Networks strategy of consolidating where their customers had different vendors, different cybersecurity vendors for different needs, and Palo Alto Networks wanted to consolidate, have their customers go with Palo Alto Networks for its full suite of offerings, take on everything they have to offer, and that way they take the full customer spend in cybersecurity. And they're continuing to see trends with that, right? And from a business standpoint, it's more convenient to deal with just one vendor than to have 3 or 4 different cybersecurity vendors for your different cybersecurity needs. So that's more convenient, although they are having some difficulty in making this transition. They're having to work a little bit harder to make this transition because competition is increasing, and those single vendor cybersecurity companies, those that offer just one module and not several offerings, they're fighting hard to keep those customers, right? Because Palo Alto Networks is trying to take the full spending, but those competitors are fighting back, offering better terms to try and retain those customers. So Forrester Research positions Palo Alto Networks as a leader in cloud workload security wave report. And that's true. Palo Alto is one of the leaders in the cybersecurity industry. One of the headwinds they saw in the latest quarter was softness in US federal government market. The situation started off towards the end of the first quarter and it worsened in the second quarter. And as a result, they had a significant shortfall in their US federal government business. To make matters worse, they expect this trend will continue into their third and fourth quarters. So Palo Alto Networks is not finding itself competitive against rivals trying to win US federal government business. That's not a good sign. That's not a good sign. And they expect this to continue into the third and fourth quarter. Not good news at all. It could be contributing one of the reasons that led to Palo Alto Networks stock price falling after the earnings release. Now, there was other reasons, but this contributed to be sure. So the reason why Palo Alto Networks wants to consolidate is interesting here. Their 2 platform customers have an average customer lifetime value that is more than 5 times that of their single platform customer. For the customers that have 3 platforms, it's more than 40 times larger. And so while they're driving this platformization, he personally thinks that they should be doing this faster. So they see great value in getting customers to add on that incremental platform. If they're with Palo Alto Networks for one platform, They want to get that customer into 2 or more platforms because that drives a significantly larger customer lifetime value. They're less likely to switch. They're less likely to go to a competitor if they're with Palo Alto Networks for 2 or more modules, and they're sticking around for longer term if they have 2 or more modules. And that's primarily why Palo Alto Networks is working so hard trying to get customers to add in additional services to their existing cybersecurity services. So one of the factors that caused Palo Alto Networks stock price to fall was a forecast for next quarter's billings that was significantly below the current second quarter billings. The third quarter billings number was significantly below the second quarter, in the low single digit range. And the CEO talking about that here, saying that their guidance is not a consequence of a change in the demand outlook. The guidance is a consequence of us driving a shift in our strategy in wanting to accelerate both our platformization and consolidation, and activating our AI leadership. Activating our AI leadership, signaling that they expect, or they target, to reach 15 billion in annual recurring revenue by 2030. Now that's an ambitious target, to be sure, but the company thinks by driving this increased platformization, they can reach that by 2030. Now, while I think the company was trying to say this to alleviate the concerns about the guidance for the next quarter, I found it to be more concerning that this was a strategic shift, because now what this signals is increasing competition. Increasing competition, which, as you know, I'm not a fan of. I try to stay away from industries that are increasing competition, that are becoming fiercer competitively on price, on promotion, on incentive, because that leads to lower profits, lower cash flow, and lower earnings for investors. So this is something that really raised the alarm bells for me. And I'm going to be keeping a closer eye on all of the cybersecurity companies that I follow. And I want to see where this goes. I want to see if this escalates, or if this is going to, kind of level up and just remain here, or if it's going to escalate. Because if this escalates, I would be concerned. Now, before I saw this report, before I saw this escalation in competition, cybersecurity was one of my favorite industries to invest in. After seeing what I saw from Palo Alto's conference call, I'm now notching that down. I'm notching it down. I'm not as enthusiastic about the cybersecurity industry as I was before hearing what Palo Alto Networks had to say. And it's because of the increase in competition that they're starting to implement. They're flat out saying it, like, we're going to increase competition. We're going to offer better promotion, better pricing to get people into our platforms. So if that means giving someone a free trial to get into a second platform on our service, we're going to offer that, right? And they highlighted that competition is also doing similar strategies to keep these customers. So this is something that's new in the cybersecurity industry. This wasn't going on, 2 quarters ago. This is now starting to evolve. And the reason for this evolution, the escalation in competition, is because enterprises are tired of spending so much money on cybersecurity, and they're just trying to limit how much they spend on cybersecurity now. It's something that they have to do. They don't like that they have to do it, but they have to do it. And they're trying to find areas where they can cut spending so that they can increase investments in artificial intelligence. Every company is scrambling, trying to look for money that they can allocate to artificial intelligence. And it looks like one of the areas they're trying to cut back on, or to optimize on, is cybersecurity. So this is something I'm highlighting here, and something I'm going to follow up on. I'm going to do a lot more videos about the increasing competition in cybersecurity, and I'll keep you all updated on the implications this could have for other companies in the industry as well. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.